And here we are, Saturday afternoon, another big day in real estate. Very good afternoon, everyone. Andrew, g'day.
G'day, Jim.
How are you, mate?
Very good, very busy. It's been a great day.
Good on you. And delighted to be joined today, folks, by the Barry Plant Home Loan Partner, our mate, Nick Reilly, who heads up Inovayt Finance. And Nick, welcome along, mate.
Thanks, Jim. Thanks, Andrew. Good to be here. Been enjoying your videos, so I'm wrapped to be part of it.
Good on you, mate. Hey, you know what? It's turning into a gig where people are queuing up to jump on, Nick. So
really
delighted to have you, mate. And
I'm one of the inaugural members, so it's a feather in my cap, I guess.
You are, mate. Thanks for joining us. How are you finding working from home?
Look, it's okay. Adapting outside of the monotony, it's just. Yeah, it's interesting. It's just the days go so quick. That's probably I'd say the worst part, but just 1 hour seems to roll into the other. So, but yeah, we're getting through it and we're nearly there, hopefully. And things like Zoom have been really good for our business. We've created a lot of efficiencies, which has been great. So we've found out a lot about our business and ourselves. So it's all good.
Yeah, I don't think you're alone, Nick. It's interesting. We were talking about that just before. The number of vendors, even though now we're back to practicing again, right? Tomorrow or from Monday, it's been 2 weeks that we've been back on deck. And you know, the first week was absolutely flying and flat out with inspections, 311 inspections our team did the previous week. And this afternoon, I'll have the numbers and it looks like we'll be pretty close again this week. So, you know, when we factor that in, that you know, we're seeing 600 odd inspections, private inspections, all 15-minute blocks, one-on-one. The amount of manpower and time that's taking is just incredible. But, you know, we're thankful to be able to at least help people with their property needs and provide shelter and real estate, you know, which we've been saying for a long time is essential. But, you know, we've also discovered that right now, even though we're practicing again, we're back in, and we can, you know, pop into the office to pick up keys and do whatever we have to do in between. You know, we're in the office today because we've been out doing inspections and just signing up some offers. And the interesting thing is the amount of time that we're saving by doing Zoom calls with our clients and FaceTime calls.
Yeah, well, I guess the big thing is the travel time for us. And, you know, we would traditionally, the mortgage broker would go and see the client, which is great because you want to see a client, you get that. Yeah, that's how you get to know someone. But once you know someone, you've got that relationship. Everything else now can be done on Zoom. So, you know, we've also got a financial planning business. So we've got to review our financial planning clients every 12 months. So being able to handle those reviews now over Zoom, which we could have always done, but now our clients are comfortable with that as well. And they actually love it because it means that it's quick. It's, you know, you're not in their house where they're trying to get the dinner ready for the kids. It's a 20-minute conversation and then you're off. So I think moving forward, it's going to be really good for us. Some of the things we've learned, that's for sure.
For sure. We'll be doing things differently.
Yeah, definitely. Now, Nick, I want to dive in because Jim just mentioned how many inspections we've just had over the last couple of weeks since getting back to action, I suppose. And a lot of the buyers that we do meet, and this may be a very good question for you to obviously answer and help out with. A lot of them are actually first home buyers, right? And many of them have been asking about government assistance that's currently available, obviously to them, particularly with being able to purchase with a 5% deposit. Are you able to elaborate on that or give us some information?
Yeah, no problems. And it's good timing because with the budget announcement this week, there's been another 10,000 of those spots allocated. There is a lot of confusion around it as to, the government lends me some money and I only need 5%. How does it all work? So all that is really happening is the government is playing the role of the mortgage insurer. So traditionally, if you borrowed 95% of the value of a house, which most first home owners would like to do, you would need to have that loan mortgage insured. And a bank will mortgage insure a loan that's above an 80% LVR or 80% of the value of the property. So what's happening now is the government is saying, well, look, we will insure that difference between the 80% and the 95%. So logistically, what would happen is a borrower would come forward with their 5% deposit. The bank would lend 95%. So the borrower would then need to contribute the 5% plus any of the costs that were associated. such as stamp duty, solicitors' fees, or whatnot. So the advantage at the moment is the no stamp duty for first homeowners. So not only are you only needing 5%, the bank gives you 95%. That cost base is very small because as a first homeowner, up to 600,000, there's no stamp duty, and then it's tiered up to 750,000. So really, you just need your 5% plus a few other smaller costs like solicitors and whatnot. The other big advantage is there is no mortgage insurer involved. So traditionally, a mortgage insurer, well, not traditionally, every time they will charge you a premium. And if you borrowed 95% of the value, that's around 3 to 3.5% of the loan amount, just depending on the bank. So, if you're talking about a $600,000 loan, the mortgage insurance premium is going to be around 20 to 21,000, give or take. So that then would come back to the client, and some of that would need to be contributed generally or rolled into the loan. So that's another cost that's gone. So it's a huge benefit, and it's really good that the government's getting involved and trying to get people into property.
Yeah, definitely. We're finding that obviously is, majority of buyers that are buying at the moment in our corridor, definitely first home buyers. So I suppose that's a question I wanted to ask, because obviously now we can provide that information to our buyers as well. So thanks, Nick.
Yeah, that's a ripper, the first home owner scheme. But when you double that up, Nick, with particularly with the home builder grant that's available at the moment, for anyone wanting to buy a brand new home. What is it? Is it 25 grand federally and
it's 25 and then 10. So the 10 that's always been there. So you're getting people, they're either getting into property earlier or they're getting in with a lower loan amount and a lower LVR, which makes the repayments far more feasible. So it's a great opportunity if someone's looking to get into the market. It's just bringing that decision forward, which is really good to see. The one thing to remember that most people are not aware of is the government's just announced another 10,000. They actually allocate those to specific banks. So the way it works is if you're a first-time owner and you would like to be part of that scheme, you need to have your application with a bank that's got some spots open. So to explain that, the 10,000 that were just allocated, 5,000 of those were split between the Commonwealth Bank and the National Bank. And then another 5,000 was split amongst a number of other lenders. So if you went to the Commonwealth Bank and all their spots are allocated, you would have to then try and go to another bank. So it's important that people understand all that before they, number one, before they purchase, because you need to know that answer before you go and purchase, particularly if that's the difference between you purchasing or not. So just a few things to remember.
Interesting. I don't think many real estate agents would know that as well. So it just shows again that you've got to get in touch with a specialist, and we'll provide your details, Nick, while we're talking.
No problems.
Andrew, if we can later in the comments, put Nick's details and his business details in there. So any of our clients that want to reach out to you, at least Nick, if you don't mind, they can reach out to you directly and have a chat to you and perhaps even talk to you about doing a health check on their current loans, because and we'll talk a little bit about that later, perhaps. But the question I wanted to ask you, Nick, a couple of years ago, we had the Royal Commission into banking. And when that was on, we saw finance really, really tighten up. And we saw the impact of it firsthand with a lot of our clients. A lot of our clients are small business people. Some of them have been in business for many, many years, and they were restricted. The banks that they dealt with for 20 and 30 years wouldn't lend them money. I know personally, even myself, we've been banking with one of the banks that we deal with for a long, long time, and they know our business intimately, and they know our personal finances intimately, and it was really, really tough to get a loan. Now, last week, with the budget, we heard Josh Frydenberg, the Treasurer, come out and say that he wants banks to loosen up. He wants lending to free up. What's your interpretation of that, and how's it looking at the moment?
Well, look, my interpretation is it's any time they come out and say that is a good sign. Whether it actually causes a significant change in the way lending's assessed or not is completely different question. Because, look, unfortunately, it's very fortunate actually for consumers. But as far as getting policies loosened up, there's an industry body called AFCA, which is where borrowers will go to make complaints. So unfortunately, if you don't have AFCA on the same page, then none of the loosening will actually occur, because AFCA is really the ruling body that decides whether or not penalties should be handed down. So, just to explain the difference that you spoke about, is post the Royal Commission, the onus has sort of gone back on the banks, and it's now bank beware or lender beware, where, which is why if you put down that you're spending $3,000 a month as living expenses, the bank will now want all your transaction statements, and they'll analyse them, and they'll just make sure that you're spending that amount of money. Whereas in the past, you would just put down what you thought you earned, and that was the end of it. So what you thought you spent. So now it's gone back to, they want to push it back to borrower beware, which in my opinion makes a lot of sense. And then it's our job as brokers and loan assessors to then make a decision on that borrower. So either way, it's good signs that they're even saying that. Will we see a big change? Look, I think we'll see something. I don't think it'll be major. But we're already seeing things since the Royal Commission loosen up a little bit. I think there was just a period there where lenders went completely the other way and just did not want to get in trouble. So they made it very difficult. So, now the Royal Commission is behind us. We're slowly seeing things get a little bit easier. Look, COVID aside, and there's some things I'll talk about in a minute, but generally good people are being able to borrow again now. There's just a bit more paperwork involved than there was in the past.
Yeah, that's good. Yeah, that's good.
Yeah.
Fair point.
Yes.
Now, Nick, one thing that obviously we get a lot is obviously a lot of buyers looking at properties, like for example today, right? But they don't really have their pre-approvals or home loans in order, right? And generally people don't really understand how long that process actually takes. Do you mind maybe giving people a bit of an advice in regards to what the process looks like?
Yeah, no problems. And it's look, pre-approvals are more important now than they've probably ever been. And just to explain that and talking about the lending criteria and what COVID has done, but there's a few things it's done. And the first thing is lenders are just asking more questions now. So, to give you an example, if you're in the travel industry or if you're in the hospitality industry and you come to the lender looking for a job, they're asking more questions around the stability of your income moving forward.
As well, mate.
Yeah, yours as well. No, exactly right. So things like commissions, the way that a lender would view commissions and bonuses has tightened right up since COVID. Self-employed people who traditionally would have to give their financials from last year, lenders now want to see what's happened during COVID. So they want some BAS statements to see what the activity's been like the last 6 months, which the financials wouldn't show. So things like that are just slowing the process up from a pre-approval point of view, or whether you're just doing a refinance. So second to that is you've had a lot of lenders that have lost a lot of staff or lost the ability to have their offshore teams functioning. They've got people working from home, disruption. You've got a frenzy of refinance activity happening because of some of the deals that are going around. So turnaround times, with some lenders have been unbelievable. And, we had a couple of lenders that they've come back now, but we were sitting at 30 business days at one stage. Now it's just not even, you can't even go to a lender that's going to take 30 business days to pick an application up. So what we're seeing now is those times are coming back, but it doesn't change the fact that more questions are being asked because of COVID. So from a pre-approval point of view, depending on the lender, but we've got lenders now that are sort of 2 to 3 days, 2 to 7 days, some of the smaller lenders. And it's our job as brokers to work out where to go based on the client's needs, and then where can we get a result reasonably quick for the client. So, but I would suggest you probably need to allow 3 weeks for that process now. You go and see your borrower, your broker or your bank, come up with a strategy, understand some extra questions that might be made based on COVID, get your documentation together, and then go to a lender. And most lenders, most of the smaller lenders now are turning things around within 3 to 7 days, just depending on the lender. And then a lot of the work we do up front will prevent any time delays, because we will know where to put a client, where we're going to get the answer that we need, instead of waiting that 2 to 5 days and then getting the answer that we weren't expecting, and we got to start the process again. But I would say allow 3 weeks. And, you know, the turnaround times are changing daily. And I think it's going to get busier and busier for all the banks over the next 2 or 3 weeks with what we're seeing at the moment.
Yeah.
Yeah, that's great. That's great. I'll tell you another interesting thing that I've noticed, Nick, you mentioned the impact of COVID, and we know that real estate particularly pretty much came to a standstill for a couple of months, you know, from pretty much all of August and all of September. There were very minimal transactions happening, which of course affects the banks. And we know that banking is a competitive, super competitive industry. And other than your major four, there's obviously a lot of other, you know, let's call them second tier lenders, if you like. And super competitive. I had a client say to me recently that, you know, he switched his home loan from one major bank to another because he got $4,000, a $4,000 incentive. And this particular guy had 3 different loans. And his logic was, well, if I switch them all, I'm going to pick up 10, 12K that I can use towards a holiday that I can't have, but or whatever the case may be. And we're seeing rates are, you know, sub 3% and in many cases sub 2.5% now, which as someone that was paying, you know, 17, 18, 19% interest rates back in the day, I look at it now and I think, wow, what an opportunity to borrow money. But tell us a little bit about what some of the rates are doing and what's on the market. What are some really good rates for people?
Well, just back to your point about the cashback offers, that was crazy. And I've had the business since 2007, and I was in the industry a couple of years before that, and I've never seen anything like it. $4,000 to refinance plus $2,000 for every other security you bought across. We had clients, you know, collecting $8,000 to $10,000 just for moving their loan, and then moving to a better rate. It's just been a frenzy, and I think it was caused by people are at home with not much else to do, so they were getting their life in order. So banks were concerned about losing business. But yeah, we're seeing fixed rates now as low as 2.19 for a couple of years.
Really?
So, you know, traditionally, I don't believe in fixing rates because I don't feel that the bank's giving you a rate thinking they're going to lose. But they're just really hard to ignore at the moment. So, you know, if you're banks are really fighting for quality business too. So what I mean by quality is that lower LVR or that lower loan against the value of the property, which puts the bank in a better position. So, you know, if you're below 80% at the moment, you're looking at sort of 2.5%. Even as a first homeowner, up at the high, you know, 95%, you're still at, you know, 2.8, 2.9, these sort of rates. So, you know, this is what's that? Sorry,
are the big banks offering that kind of amount?
Yeah, and you know, when we're talking smaller banks, you know, we're talking household names like Bank of Melbourne, ING, Bank West. Everyone knows who these banks are. So, you know, everyone is offering these sorts of rates, which is what's driving that first homeowner market. Because why would you pay rent when you can get into money at sort of 2.8, 2.9%? So, it's crazy stuff. It's just when do you fix? Because I remember when the fixed rates were 4%, I couldn't believe it. And when they were 3.5%, I couldn't believe it. So here we are, low twos, and you just wonder what's the right decision.
100%. Now, look, you've just brought up an interesting, you know, obviously a question as well, and Jim touched on it before about doing a health check. So is now a great time to do it? Should I get in contact with you? How does that work, Nick?
Yeah, we're saying anyone who's had their loan for 12 months or more should be either asking the bank for a reduction in a rate or seeing what else is on the market. And traditionally, you would, if you went back to your bank for a rate drop, you wouldn't be able to achieve what you could if you were to go to a new lender. What we're seeing at the moment is banks being very aggressive to retain business like they never have. So, you know, to give an example, if you were paying 3 and a new lender was going to give you 2.2, then your existing bank might give you 2.5. There's obviously a bit of a hassle to move, so they would think, you know, we'll give you 2.5 and you'll probably stay. Now we're seeing them match the new client numbers, and it's just because they're losing so much because of this frenzy that's happening. So we would say anyone that's had a loan for 12 months prior to COVID, definitely ask a question. You know, a lot of our clients, we're not refinancing at the moment. We're just we're just going to the existing bank with some other offers on the table and just negotiating cheaper rates. So yeah, if it's been 12 months, it's definitely time to ask a question.
Yeah, definitely.
That's there's some really powerful points there, Nick. And I've got to say to you, your home loan is one of those things that I know personally. You get a loan, it's there for the next whatever amount of years, and you generally don't tend to look at it. You just make your monthly payment and that's it. But it just highlights a fantastic point and really important, and certainly to any of our clients and followers that are watching, to reach out and have a chat and just do a health check on your loan, because obviously the products are changing pretty much daily or weekly, and certainly monthly. And it's a competitive space, and it can really make a big difference to your cash flow, to people that perhaps have got a couple of loans, whether it's the property that they're living in or an investment property or whatever the case may be. So, mate, just want to say thank you so much for your information.
No worries.
It's really sort of hit a nerve, particularly with me as well. And I'll be in touch early in the week to talk about a couple of my loans, Nick.
No problems, mate. Happy to make a call for you. And a good point you just brought up too was investors, and quite often investors just let the home loan, let the loan take care of itself. It's tax deductible, but that's probably where you'll save the most at the moment, is on investment loans. And if you've got someone with 2 or 3 properties and they owe $600,000-700,000, and you're saving them 1%, that's $6,000-7,000 a year. Could be the difference between them buying another property. So, everyone should be just, taking note of what they're paying and definitely asking a question at the moment.
Yeah, spot on. That's actually a good one, because people probably don't realise the actual savings until they actually ask the question. And a lot of it's actually asking, because some people just kind of say, "Oh, we'll just leave it," but they don't realise the impact, what they can actually achieve by just changing and refinancing and actually, doing what you just said.
Yeah, exactly right. And it's, again, you don't, if you're not in a position to refinance, because some people aren't, whether it's, income's been an issue or whatnot, but you can still ask the question to your existing bank. They don't know you're not in the position to refinance to somewhere else. So always ask the question. They're only going to say no, aren't they? So
100%.
Yeah, exactly. Well, Nick, on behalf of Andrew and myself, and certainly all of our friends that have been watching, mate, thank you so much for your time. Some really, really valuable information there. And again, the offer is there for our clients to reach out to you. Andrew will put your contact info. It's already done.
Done, mate.
Gee, you're good, mate.
Well, it's Jim. To be honest, I've got a lot of out of this as well, and I think for anyone watching this, realistically, Nick's more than happy, but it sounds of it, to help them out. And I think it's really important. I think for any of our clients, any of our friends watching this, they probably don't know what they actually can, achieve by listening to this. Obviously, listen to Nick. It's fantastic advice. So, 20 minutes of his time might save you a lot of money.
Absolutely. Nick, thank you, mate.
No worries. Thanks for the opportunity, and good to see you boys back out at it. It's good to see.
Good on you. We'll talk soon.
See you guys.
Have a good weekend, mate.
See you, boys.
Bye.
Bye.